receipts, I mean, the volume of cash is hard. And the one thing that you guys have to remember, it's a little easier to talk about it when we're sitting in the classroom, but if I drop a $20 bill, who owns the $20 bill? If I'm walking down the street and I drop a $20 bill, who owns it?
Oh, nobody does.
Well, whoever picks it up, right? So I drop a 20 and you guys are all standing around me. Whoever picks it up first owns it. Because is there any way to prove that you own that 20?
No.
Nope. Cash is owned by the person who possesses the cash, right? And there's no way outside of a bank and knowing the serial numbers, there's no way to prove that you're the one. Now, there's different ways to receive cash. You can receive cash in person, and you can receive cash as a business by mail or by electronic. So the primary goal in this whole part is that we receive it, the right amount of cash in the bank appropriately. All right, so we're going to go through that. So cash is, as we know, not always received by this right amount as what we rung up. This happens in the stores. It happens in real life. And so when that happens, we have what's called a cash shortage. And it is rung up as such, and it's considered a loss. Every company has a different threshold for what they're allowed to have as a cash shortage. So when you look at this journal entry you see in front of you, you see $6,100 and they're short $3. Do you think this company is going to care that they're short $3? No. But if they were short $100, are they going to start to care more? Yes, exactly. So their threshold for a cash shortage is all going to be relative based on the company. So that's also the case when it comes to individuals. And if you work at a company that does allow cash, how much are you allowed to be short in your drawer? You know, is it a couple bucks? Is it pennies? Is it a 10? I've talked to people that are waitresses and waiters and bartenders, and sometimes their limit is $10. Somebody's limit was $50. It all just depends on the company you work for and who you work. Bankers that tellers that I've worked for, it's nothing. You cannot, at a bank, they told me you cannot be different at all. So then it just depends on where you work. When you receive cash remotely from a source, you usually get some type of remittance notice telling you that the cash was received. It can come by email form, all right, saying that this was received. I get these a lot saying that my AT&T bill's been paid, my Ameren bill's been paid, my gas bill's been paid, my student loan bill's been paid. All those things will pop up telling me when they've been paid. Okay. And so if you don't have to write a check, then it's going to come across as electronic funds transfer. So that's an EFT. Most payments are going to involve either an EFT or writing a check. All right. Some companies still use something called petty cash. We're not going to spend a lot of time on this because it's not something I'm going to test you on. You might see something in a quiz question, possibly. I don't believe you will, but it could be like in a video quiz. Petty cash is a small amount of cash that a company keeps on hand for incidentals. It used to be used a whole bunch, but now companies have a lot bigger threshold for giving out what we call P cards, purchasing cards, and that individuals can use that to go buy lunch or that to go buy random purchases that is needed in the office. Whereas before, if someone was going to go buy lunch, they would take money out of petty cash to go do that and then put the receipt in the petty cash. The whole purpose is that you have a control over that amount of money and that individuals then have to put the receipt in there and somebody else is controlling and accounting for that petty cash. All right, we're going to go through this. These are all very tiny, all right? But basically, they're showing you how if you pay for something with a check, you start with a purchase requisition, all right, which is the first step. You order something, all right? The purchase requisition says I want to purchase these items. The next thing once that's okayed, is the purchase order. So the items are ordered. That's the restrict access. Not everybody can order something. All right. Then the receiving report comes in saying that the item has been received in the warehouse. That's the segregation of duties. Somebody orders it and they have the authority to order it. It gets received out in the warehouse. That's the receiving report. All right. Then the invoice comes in and it goes to the accounting department. All right. So they get the invoice and they have something they have to pay. They haven't seen the receiving report yet, but they will see everything else. They are not, let me go back. They're not going to pay that invoice unless they have the purchase order and the receiving report. So they need to have all three documents, purchase order, receiving report, and the invoice, before they would pay any document. And that's an independent verification. They're not going to pay those items without those things. And then they'd issue the check. All right. And there's our petty cash that we were talking about. Okay. So the bank reconciliation is our next thing. So the bank reconciliation is the big part of Chapter 5, outside of just overall fraud and knowing how to control through our internal controls. The bank reconciliation is an internal report that's prepared to help ensure the accuracy of the bank and also the accuracy of our reports, all right? Most of the time, the mistakes are on our side, but every once in a while, you get a mistake from the bank, all right? So we're looking at hopefully restricting access to cash, documenting our procedures, and independent verification. So we're doing 3 of those controls. All right, making sure I want to keep going. All right. All right, so this, if you're looking at this, this is what a bank statement can look like. And I'm saying that kind of with a smile on my face, even though I don't think you can see my face, because most of you guys don't get a bank statement anymore. But if you're working at a company, you would have to get a bank statement. Companies still get the real paper thing, and most of them keep them on file until they're audited so that they can show that they're doing a bank reconciliation. Lost my train of thought. So there's several things just to look at quick here. You have your current balance, all right? That current balance, notice, is the ending balance, all right? Because that is the balance on 6/30. We don't really care what the balance was on 6/1. We're looking at the balance at the end. So that's our current balance, right? You have a column typically for withdrawals and a column for deposits, and then you have a running balance down the side. Okay, the withdrawals don't usually have right next to it, but over on the side, they're going to tell you what it was. They're checks. Then here we have what's called an NSF check, and then we have a service charge. Who can tell me what an NSF check is? Non-sufficient funds, which stands for, what's a layman's term for that?
A bounce check.
Thank you, a bounce check, right. So basically, someone made a deposit and then their check bounced. So we have to take it back out of our account. So this is what our bank statement looks like. This is our money. We had $7,762, and now we have $10,662. We had 4 deposits, and we had numerous withdrawals. Now, what we want to do is we want to go through and we want to look at what the bank knows and what we don't know from the bank. And then we want to look at things that we might not know. So there's 2 different things that are going on. So at the end of the month, on June 30th, the bank might not know some things that we did. And on June 30th, the bank is going to do some things that we don't know they did. So what I always recommend you guys do is try to memorize these items. And I usually try, hang on, it's moving on me. I usually try to write them so that you can memorize the 2 things on the left side, which is typically the bank. I always do the bank reconciliation on the left side, and then I always do the book on the right. So if you can memorize the items on the bank side, which is the left side, so these items over here at the bank, right? You're always going to have your balance, and then you are going to add in what we call deposits in transit, all right? Those are deposits that we made recently that the bank doesn't know about. So those are things like, I just deposited a check today, right? Now today is June 3rd, so it doesn't matter. But if I would have made that deposit on May 30th, that deposit would not have gone into my bank until at least June 1st, 2nd, or 3rd. But it would have gone in to my bank because I put it in on May 30th. So it would have gone into my bank. So I need to make sure it gets my book, sorry. So I need to make sure it gets added in to my bank. If I deposit it on May 30th, then it needs to go into my bank's balance because it is officially part of my book. All right? Another one is that we subtract out outstanding checks. Right? Those are checks that we've written, checks that we've recently wrote, but they haven't cleared the bank. Now, they might not have cleared the bank for numerous reasons. We could have put them in the mail and they haven't reached the destination yet, so I mailed them on the 27th of May. Or they could have reached the destination, but they haven't been deposited. Some companies do deposits once a week. Or they could be like me, and when my dad gives me a check, I put it somewhere and forget to deposit it. All right, so if you leave it somewhere and it doesn't get deposited, then it doesn't get deposited. And then this first one here, the bank can make errors. It's just not as common as it used to be. So that's plus or minus. So I like to say there's two things. There's two things on the bank side to remember all the time. You add in deposits in transit and you subtract out outstanding checks. If you can remember those two things, then everything else goes on the other side. So everything else on the book side, we start with the balance. And then what does the bank know about that I don't? Well, you don't know what your interest is until the bank tells you. All right, so we get to add in interest. Well, interest isn't known until usually May 30th. And then you don't know until the bank lets you know how much that is. So in my case, that's like 30 cents. All right, big deal. All right, then a lot of times any EFT transactions. Typically these are pluses because if you're taking money out of your bank account, you already knew you did. So the money that you don't know about is when a deposit's made into your account. You don't know until the bank tells you. Then service charges are usually at the end of the month, so you subtract those out. And then you also don't typically know about any NSF charges until the bank tells you. And then you also have plus or minus errors. And you usually don't know about an error until the bank sends you your bank statement and you see the mistake. So you have 4 things plus the errors that are on the book side, and you only have 2 things on the bank. So that's why I say start on the bank side every time and take the deposit in transit and the outstanding checks first, and then go over and everything else goes on the book. And you can cross them out as you go. All right, we'll work through an example. Does that make sense? Perfect. All right. Okay, so on the next screen, we have the company we were working with, all right? And the first thing that we're going to do is we're going to do the bank, all right? Because I only can do one of them on here at a time. I don't think I can squeeze them both. I might be able to. So if we do the bank, it's thinking. don't do that. Go back. Hang on. It's sending my request. Drawing mode. It's too slow. See, now you guys are getting the wonderful advantage. I gotta get better at hitting these buttons. Okay. Let's try this again. Even though now you saw some of the answers. But so what is the balance in the bank? Can you read that? What balance are we going to use for the bank? So if we're starting on the bank side, what balance are we going to use? We're trying to come up with what the bank's actual balance should be. So are we being quiet or do we not know? All right, I'll give you a hint. If we're looking at the bank's balance, those numbers right there. So it's 10,638.40. Then we want to add in deposits in transit. So how do we figure out deposits in transit? Well, you're going to look over here. How many deposits did I make? I made a deposit for $3,500 and $1,800. So then you're going to come over here. You see a deposit for $3,000 and you see a deposit for $500.
I can't spend that cook. Hockey players are dirty players too.
Is that a question or are you talking to somebody else?
You'd be surprised about how nice people are. You know, one of the reasons I'm not a huge fan of basketball players and baseball players, basketball players, they tend to...
You're not on mute.
Care about people, but they often...
You're not on mute.
Players, a lot of the star players are not very nice are not some of the nicest guys to be around.
Okay. I'm going to try to talk over it.
To make it more. In hockey, that's something you don't want to do because in hockey culture, it can be seen as a player who's selfish or just not, or the effort level's not there.
Hey, buddy.
Can you?
You're not on mute. Yeah.
Is he?
Player.
Are we good now? Okay. Okay. Can you guys hear me okay now?
Yes.
Okay. So, all right. So the $3,000 and the $500 both show up on the bank statement, but the $1,800, which we notice was on June 30th, does not show up in the deposit column of the bank. So that is a deposit in transit. And I'm writing, it's just taking a second to show up, so it'll be there in just a second. All right, so that the $1,800 is our deposit in transit. All right, then we're going to come over and see if we have any outstanding checks. Well, we had, and the last one's covered up, but we had six.
I couldn't date her. First off, I don't think she would really like some of the qualities of my life that are outside of that.
6 checks.
She's a great person. Be very understanding. I feel like.
Hey, Your mic's still on.
Thank you. He has 6 checks that were written, 100 through 105. And I know it's really small writing, but if you go over, check 100 for $500, cleared right there. Check 101 and 102 for 55 and for 100 cleared. And then check 104 cleared for $65. So check 103 didn't clear. Oh my Lord. And check 105 didn't clear. So we're going to subtract 145 and 815. And of course, off the top of my head, I can't tell you what that number. Yeah, I can. It's 11,478.40.
I'm sorry, is there any way you can mute the...
I think I can. Yeah, hang on. I got to get out of, I had to escape out of that, so hang on. But I can.
So, and that's the important part. There are other kids who I think maybe are too far to a little bit. I crossed the line too much, I think. Yeah, I don't want to be around.
Okay. Will that take care of it? It's not showing as muted though. All right, you guys good?
Yeah.
Okay, okay. It's not showing as muted, but yet I don't hear it, so I'm thinking that must be good, so, okay. All right, so I know that made my other thing go away. I apologize, I actually forgot I could do that until you said that a second ago, Wendy, so I apologize for that. I forgot I could make him go away. Let me go ahead and bring this back up. Did you guys have any questions when I was showing the bank side, even though I just lost what I did? The 2 things I want to bring up that I had there, though, is I was showing you guys that this check hadn't cleared and this check hadn't cleared. 104 did clear, but I vaguely mentioned, I don't know if you guys caught that, it cleared for $65. So my writing will come back up. There it is. So, but we'll address that, but that will be addressed on the other side. So we had our deposits. These all, we took care of this, and the rest of these have been taken care of. So, and I noticed what I did is I crossed them out as I did them too. Because basically, that means the things left are the ones that you have to address on the other side. So now we come over here to the book, and our book balance is $11,391.40. Now, one of the common mistakes is pulling in this number. You don't want the beginning balance, because if you can read this little writing, they equal each other. That's not what you want. You want to bring in the ending balances, so that's not the numbers you want. Now, the first thing you usually want to bring in is there any interest? Well, if we come over here to the deposit side, the addition, we earned interest of $20. And then we had an EFT deposit of $100. My writing will catch up. So we had interest and an EFT deposit. Right? Then we had an NSF, non-sufficient fund check, of $18. And we had a service charge of $6. So then the only thing it left us with was the error. So we knew we had an error because when we looked to see if these checks had cleared, check 104 cleared, but when it cleared the bank at $65. But when we wrote it down for 56. And one of the most common things with mistakes on our end is that we write it and we transpose numbers. So we should have written 65 because 95% of the time when a check clears the bank is right, all right? So we should have written it down for 65. Instead, we wrote it for 56. So do we need to add $9 to our book balance, or do we need to subtract $9? What do you think? Did we take out too much money, or did we take out not enough money?
Not enough.
Not enough, exactly. So because we didn't take out not enough, we have to take out another $9. We took out $56, we should have taken out 65. And then once we do that, everything is taken care of. So everything on both statements needs to be accounted for somewhere. We want to make sure that either they both are on each statement, like we did here, 500, 500, 3,000, 3,000, or if they're not, they show up in our bank statement. So now when I go to the next screen, this is what it looks like in good writing side by side. So you start with the ending cash balance per the book and the statement. You add in your deposits in transit, outstanding checks, and you're done. And then over on the other side, you got your additions and subtractions. Now, the last thing, and you'll see this in your homework, is once we're done, this is the number that should be in cash. But all we did here was a bank rec. In order to make this actually our cash number, we have to do 1, 2, 3, 4, 5 journal entries. We have to go in and put those adjustments into cash. We do not need to do journal entries for the bank. Who does the bank's journal entries? It's not a trick question. Who does the bank's journal entries? The bank, right? The bank does the bank journal entries. We do WMT does their journal entries. So each company does their own journal entries. So we just made 5 adjustments to our bank balance. So we need to go do 5 journal entries. The benefit and easy part of these journal entries is each one of them has cash in it. Okay? These 2 are plus cash. These 3 are minus cash. My minus isn't showing up yet, but it will, or minus cash. All right, so let's go look at it. Okay, it's nice and slow. There we go. All right, so the first one was we received $20 cash. So debit cash, credit, interest, revenue. We got revenue from interest. We got interest, so it's interest revenue. The second one, you guys tell me if you know what it is. We had an EFT transaction. Somebody paid us $100. What do you think that is going to look like? Somebody paid us $100. What's the easy part? What'd we get? Cash, okay. And if they paid us, that meant that they owed us money. So what are we going to credit?
Revenue?
No, they owed us money. Not we already recorded the What's the account?
Accounts payable?
That's when we owe money. What's it called when they owe us money?
Receivable.
Yes.
Receivable.
Yep. So cash and accounts receivable. Somebody owed us money. Okay. Now the next one is somebody owed us money and their check bounced. So now we have to put it back in their account. And we have to take the cash out. So now we got to take the cash away. So it's going to be a credit to cash. And we have to put the money back into their account. So sometimes this one's hard the first time you see it. But if somebody, an NSF check, basically, we're reversing this entry. Because assuming this person paid us with a check and their check bounced, we got to put that money right back into their account. So now they owe us the money. They owe us $18 again. Does that one make sense? If someone owed you money and they paid you, you'd do this journal entry. But if their check bounced, you'd have to put it right back into their account again. So now they owe you money and you have to take the cash out of your bank account. All right, the service charge is the easiest one. It's some type of office expense in cash. Supply expense, office supplies, something like that. And then a lot of times the hardest one for you guys is the error, all right? The journal entry is not a debit to errors. When we wrote a check to somebody for $56, all right, and it was for the wrong amount, we were paying a bill. We were paying off an accounts payable. So basically we had this account that looked like this, and we owed someone $65, and for some reason rewrote 56. So it looks like we owed them $9. So we have to go in there and debit it $9 more to make it go away. So
Are we supposed to be seeing like a screen right now?
Oh, it did it again. Yes. I cannot for the life of me figure out why it keeps doing that. Let's save this. Yep, and when I come back over here, it always says restore. I think next week I'm going to try Zoom. I have to do things differently on my end, but we'll see if Zoom works better. All right. All right. I think, whoops, let's go back. Went too crazy. Okay. And then we did that one, so. All right, so let's go now. Well, I still have your screen. Let's go and look at your working papers again. And now we're gonna go to problem E5-6. There we go. Okay. So this is a bank reconciliation, obviously. So this is the bank statement. This is our statement. And then this is where you can work it right here. Or actually, I'm sorry, here's where you can work it. So if you have your working papers, I will just keep this floated right here for right now. And then I just lost it, so no, you won't. No, I won't. You have it. There you go. So just to make sure we're started on the right foot, everybody, what is the number that I'm going to put for my ending bank statement balance? What is the number that I'm going to put right here that I'm starting with for the bank statement?